Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachardis, and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing upcoming Australian data and the outlook for the Aussie. So Marios, early on Thursday, we'll get Australia's capital expenditure data for the third quarter. Is this data likely to shed some light on whether the RBA will cut rates again? Or do you think that what happens next in the trade war is likely to be a bigger driver for the Aussie?
I would say the latter. So the trade war is the most important thing for me. Look, economic data are always important. For example, the upcoming capital expenditure data are expected to show that investment by firms has fallen for a third consecutive quarter, which, if met, it would be pretty discouraging about the Australian economy, and it could make the RBA, the Reserve Bank, more likely to cut rates in the coming months. But having said that, the biggest variable for the RBA is what happens in the trade war. Australia is an export-driven economy, so the global outlook matters a lot. So, yeah, I would say that the trade war is the most important variable for both the RBA and the Aussie.
So how do you see the trade war, and what's the broader outlook for the currency?
Well, let's say I'm not an optimist. So here's my thinking. I think the risks surrounding the Aussie are currently asymmetric. Now, we've already seen the markets, the latest headlines rather in the trade war have been optimistic, more or less. The two sides have apparently reached a broad consensus for a trade deal, for a phase one deal, but there are still some sticking points. For example, how quickly and by how much should the existing tariffs be rolled back? Now, the size of Chinese agricultural purchases is another sticking point. The bottom line is, we've seen the markets rally time and time again whenever we've had a headline that the phase one deal is coming closer. So much so that I think that a phase one deal is more or less fully priced in by now. If not fully, then almost. The markets have reacted to it many times. So if we do get a phase one deal, that's great, but that's already the market's base case scenario. Therefore, any upside reaction in the Aussie may be relatively modest. But on the other hand, if we get any disappointing developments, or perhaps a setback in the negotiations, that would derail the current market narrative, and it could lead to a much more violent downside reaction in the Aussie, I think.
Marios, thanks so much for joining me.
Thank you.
And thanks for watching at xm.com.